So good afternoon, everybody, and thank you for joining our Operational Resilience webinar based around the CrowdStrike chaos and how to plan for disruption. This is proudly hosted by the Payments Association, so I want to say first and foremost thank you to them for their support in helping us to sort this out and arrange it. My name is Kevin Flood. I sit in the Payments Ecosystem Strategy of FIS, and today I will be joined by Tess Kelly, who's a partner in Addleshaw Goodard, and Harry Ellis, a partner in Linklaters, who both sit in the regulatory side of the businesses. So Harry, welcome to you, and Tess, welcome to you too. So what we'll do is we'll do a couple of brief introductions, and then we'll start running through the brief kind of panel discussion, and we'll park 10-15 minutes towards the end of the webinar to kind of go through questions that will come through. On that point, in terms of questions, on the Zoom screen, you'll all see at the bottom, there is a little Q&A box. Anybody who wants to ask any questions throughout the course of the webinar, pop them in there. We'll keep an eye on them. So every time and again, I'll be glancing over. That's just me trying to make sure and see if any questions have come through. What we'll do is we'll then collate them, collect them all through. And then at the time we've got at the end, parked aside, kind of take some time to go through and answer those questions as best and as full as we can. So, Harry, if I can just give over to you for a very brief introduction, and then Tess, over to yourself as well. So, Harry, first of all, welcome. Thank you for taking the time to join us today.
Thanks very much, Kevin, and it's a pleasure to be here. So, as Kevin said, my name's Harry Ellis. I'm a partner in the financial regulatory group here at Linklaters, and also one of the heads of the payments practice.
Thank you. And Tess.
Hi, good afternoon, everyone. It's a pleasure to be here. I am Tess Kelly. I am a financial regulation partner at Addleshaw Goddard. I focus predominantly on prudential regulation. Prior to joining the firm this year, I was Deputy General Counsel at the Bank of England, and amongst other things, had under my remit advising the Financial Market Infrastructure Director at the bank, which includes supervision of systemic payment systems.
Excellent. Thank you, Harry. Tess. So for myself, so I've previous experience working in a bank, so trying to understand and deliver to those large regulatory changes. Spent a big time in a Big Four, so again, understanding how those impact and helping customers kind of through those deliveries from a technology side and business perspective. Now I sit on the vendor side, so I get to see a really interesting perspective from how we help customers, and then also the obligations we have as vendors of a lot of kind of banking and financial services technology. So I think what we want to do is, Tess, I think if we can open up with yourself in terms of one of the things we've been discussing, kind of a group, and I think would really help set the scene, is if you can look and kind of help us in a layman's terms and obviously explain a little bit of the background on those operational resilience regulations kind of up until now, probably using the FCA timeline, give or take 2022 to 2025, the March deadline. So I can hand over to yourself 5-10 minutes to just talk about that, please. That's all right? Certainly.
Thank you, Kevin. Happy to. So look, this is a really important topic, and it's fantastic that you're taking time out of your diaries to be here. I can tell you from having spent 10 years at the Bank of England that the regulators, they really care about operational resilience, and it's a really huge focus of all of the regulators right now. And that reflects, particularly in the last 5 years, both UK and international regulators focusing on operational risks, having done a lot of work on financial risk post-global financial crisis, and now sort of turning their focus to operational resilience. And that's been reinforced by recent operational incidents, so the global IT outage caused by the flawed update distribution by CrowdStrike, a July 2024 outage of SWIFT, and then various cyber attacks on a number of regulated firms, and that's only intensified the focus. And of course, we had the COVID-19 pandemic, which was, a global illustration of operational risk, amongst other things. So by way of illustration, in terms of regulators' focus on this, continued focus on this, in March of this year, the Bank of England's Macro-Prudential Financial Policy Committee, that looks at financial stability and financial services as a whole, it published its macro-prudential approach to operational resilience, and it emphasised that operational risk is even more important to maintaining financial stability than it's ever been before, in light of the financial system becoming more digitalised and interconnected. And the FPC only sees that this will be continue to be the case as evolving technologies play a greater role in the provision of financial services. You've also seen in the FCA's business plan that minimising the impact of operational disruptions remains one of the FCA's commitments. And across all of the regulators, operational resilience remains front and centre in communications of supervisory priorities to firms. So just stepping back, what is operational resilience? So the regulators have got a reasonably common definition that they use and in their communications, and they define it as the ability of firms and the financial sector as a whole to prevent, adapt and respond to, recover and learn from operational disruption. Harry, I think, is going to talk about the EU approach shortly, but in the UK, the way that the regulators have come at operational resilience is to publish a kind of combined operational resilience framework. So each of the FCA, bank and PRA have their own resilience framework, but they've worked together in producing it, and there's quite a degree of alignment, although there are some nuanced differences across the three regulators' operational resilience frameworks. And the framework's essentially building on existing policies regarding operational risk, business continuity planning, and material outsourcing, which was being developed at a similar time. So for this forum, I think kind of, the sort of really relevant application is the fact that the FCA's operational resilience framework applies to firms that are authorised and registered under the PSRs and the EMRs. And the Bank of England's operational resilience framework applies to recognised payment system operators and specified service providers under the Banking Act 2009. So broadly, all three frameworks do the same thing, and they ask firms to essentially identify important business services, and senior management need to identify, engage, and kind of prioritise those services that, if disrupted, would impact the relevant regulators' objectives and indeed the firm's clients. Firms are to set impact tolerances. And they're to set them on the basis of the extent that they will be able to continue important business services following severe but plausible disruption. And firms then required to ensure that they can remain within those impact tolerances. So firms need to map their important business services, test their capability to continue, identify vulnerabilities, and then address those vulnerabilities. So as I said, the FCA Bank and PRA operational framework went out in March 2021, and then firms had until the 31st of March 2022 to identify their important business services, set impact tolerances, and then carry out sufficient mapping and testing to a level of sophistication to enable them to do those two things. Now, the impending deadline, which I'm sure you're all focused on, is the 31st of March 2025. And by then, firms within the perimeter for operational resilience have to have performed mapping and testing so they're able to remain within their impact tolerances for each important business service. And firms are expected by the regulators to have made the necessary investments to enable them to operate consistently within those impact tolerances. Just in terms of, I'm sure we are certainly going to come on to the practicalities of this, but on the 28th of May this year, the FCA published its observations and insights on preparations to date. And if you're in the process of implementing the operational resilience framework for your firm, I'd really recommend, if you haven't already, that you have a read of these, because they're very helpful in explaining what the FCA's expectations are. I'm not going to go through all of them, but because they're quite extensive. It's probably about 20-25. I'm going to pick out a few. So the FCA expects firms to consider whether they might, as well as including their rationale and justification for identifying a business service as important, whether they might also include the rationale and justification for not having identified a particular business service as important. And particularly in the case, there's an annual review that's expected of your important business services. And if you sort of change your mind essentially in doing that annual review, then setting out your rationale for that is something the FCA expects to see. The FCA comments that impact tolerances across the industry have primarily been set as time-bound tolerances, and has advised that firms should consider using other metrics, so metrics such as types of customers, volume and types of transactions, criticality of transactions, etc. The FCA sort of notes that a wide range of impact tolerances have been identified by firms, but with limited rationale for when intolerable consumer harm or a risk to market integrity is reached. And that's required the FCA to kind of go back to firms to fully understand impact tolerances set. So the more you, hope you haven't lost me in terms of like, the more you include the more you include your rationale and your self-assessments, then firstly, your board will understand, what's been set and why, and secondly, that's more likely to kind of limit follow-up questions from the FCA. The FCA sort of expects scenario testing and mapping to have matured in this period between sort of 2021 and 2025. So they talk about the sort of journey to the 2025 date as being a transitional period. So, it's very much, and I'll talk about this in a minute, like very much an ongoing expectation, an ongoing process. And to some extent, this is really the start, sort of emphasised at the beginning of the operational resilience journey. And the FCA expects remediation plans around any vulnerabilities that have been identified to be fully board approved, funded, and evidenced that through repeated scenario tests that the vulnerabilities have been resolved. And just the final point that I'll note is in terms of good examples of self-assessment documents, and the types of things that the FCA would expect to see include an overview of vulnerabilities found, scenarios tested, including the outcomes of those tests, remediation plans, and the firm's strategy to ensure that it remains within impact tolerances for all important business services by no later than that 31st of March 2025. I've alluded to it earlier, so operational resilience is here to stay. And I think that's not least because from a financial stability perspective, it's not unlikely that the next financial stability crisis will be driven by an operational risk incident, but that's kind of baked into the framework that this is to become business as usual. There should be an annual review, a review if there's a material change to your business or to the market that you're operating in. Any changes to important business services, impact tolerances and mapping should be clearly identified in your self-assessment along with the rationale. And scenario testing should be part of business as usual and be reviewed on a regular basis. Just to sort of, put a little bit of kind of context to what the consequences might be for firms should they not comply with the operational resilience framework. Now, to some extent, time will tell as to the extent to which regulators are kind of prepared to enforce. But regulators have shown their appetite for enforcement. So a bank was fined 48 million for operational risk management and governance failures. That included the management of outsourcing risks in the not so distant future, so distant past, excuse me. So I think, that's something to bear in mind in terms of what the consequences might be of not meeting the expectations of your respective regulators under the operational resilience framework. And I'll also note that in the FCA business plan on operational resilience, that commitment by the FCA, they sort of note in reasonably stark language that they continue to deal with firms that cannot meet our standards on operational resilience, and then reiterate the expectation around what firms will have done by the 31st of March 2025. So I'm going to stop there and hand over to Harry, who's going to take you through the EU perspective on operational resilience. Thank you.
Yeah, just before, thank you, Tess. I think obviously one of the key things that really resonates back in is it is a framework. It's here to stay. the regulators, well, it applies across all of the UK. And I think the really key bit he said there was that self-identification and, identifying those critical business services and then really homing in on why have they been identified, why have the ones that we've said are not it's going to be sitting in that particular business critical applications, again, what's the rationale for that, reviewing them on an ongoing basis. And I think the more prescriptive we can be in the why and why not, the more helpful that will be to kind of firms as they push that through and kind of build out that rationale, and that self-identification really kind of helps. So yeah, I think that was one of the bits I took specifically from that bit. And I think, Harry, if we then look from, obviously that's very specific to the UK, it's more framework based. If we then look and cast our eyes a little bit over to the right-hand side of a map, if we were to look at it that way, slightly different approach, obviously, in the DORA perspective, and there's some nuances and differences between regulatory requirements. And I think Tess, you nicely touched on it in terms of being fined for outsourcing and outsourcing identification. So I think, Harry, we can just kind of bring you in on the top of that from obviously from your perspective and what you're seeing across Europe and with your customers and clients. I think is something, we can talk to us a little bit about that in terms of where it differs and why it's important.
Yep, thanks very much, Kevin and Tess. So well, one of the words you just used there was prescription. And if you want something which is prescriptive, then DORA is the place to come. DORA, the Digital Operational Resilience Act, has been launched in the EU. Interesting enough, it's actually been on a slightly quicker timetable than the one in the UK. And like lots of bits of post-Brexit sort of regulation, it is similar but different to the UK operational resilience framework that Tess has just been taking us through. So it covers the same principle in that it's covering the provision of services into firms, and it covers many of the similar obligations. So it has requirements to have risk tolerance limits, outline of your resilience mechanisms, testing plans, stress testing, things along those lines. Although, as I said, it gets into a lot more prescriptive detail. There are an enormous number of RTS in there, which will need to be looked at and complied with. So a much greater level of detail than you get for the FCA operational resilience rules. The key difference here is really in the scope of the rules. So the first word of it is the digital. So it effectively covers ICT services, so information and communication technology. So provision of data services, provision of IT. So it is not as broad ranging as the FCA's regime, which is trying to get you to look at all of your business services on a more holistic basis. This is focusing in on the digital side of the ledger, as it were, and really requiring firms to do a very, very deep dive into the provision of services of data and on the communication side. And just to give you another example of the prescription, there is a very, very prescriptive regime around the documentation that you will have to have in place with firms who are providing services to you. And that's certainly causing a lot of angst to the industry as how really people are going to go about it. Now, there are two sort of levels of that. There's just what I would call the normal provision of services, and then there's critical provision of services, and where you're providing critical services or having the critical services provided to you, then there's a step up in the obligations that you have to comply with, particularly around the documentation side of things. So for those firms who have both UK and European operations, there's a real sort of conundrum as to how you're going to comply with it, because, as I say, they have a lot of similar features to it, but they're not the same. And so just compliance with the UK rules is not going to get you into compliance with the EU rules, and vice versa. If, however, as a participant on this, if you are just a UK firm, then actually you don't need to think about DORA from the perspective of your compliance with DORA, but you may need to think about it in the context of the indirect application of DORA. So if you are yourself providing ICT services to a European entity to whom DORA does apply, then you will be caught within that within those requirements, because that firm will be seeking to do its stress testing and all that sort of thing, and impose certain contractual obligations upon you. So one of the first things you need to do is to understand those differences between the two regimes. Now, I'll just say in passing that there is also a separate element to DORA, which is the critical third-party regime. And this effectively allows the regulators to bring into supervision critical third parties. So the really large providers of ICT services, sort of your Amazon cloud services and things along those lines, which is a sort of consistent theme in Europe at the moment of trying to get these big tech behemoths under some form of supervision, or some sort of regulatory oversight, whether it's through this or through PISA or one of the other regimes. The other thing I just wanted to touch on is also just to remind everyone, and Tess has alluded to this as well, is that the operational resilience regimes don't sit out there just sort of in the ether on their own. They're building on other building blocks of regulation. So there's been an outsourcing regulations for many years, both in the UK and Europe. Those are supported by things like the EBA outsourcing guidelines. So those really are pretty consistent between the UK and the EU, and that then requires firms to identify outsourcing. So when it is getting the benefit of an outsourcing, so that is where where someone is providing you a service which you would ordinarily be expected to provide. And again, there are different levels of requirements depending upon whether it's a standard outsourcing or whether it's a material outsourcing. And for the FCA, you've got to keep a register, you've got to inform them, and there's a lot of rules all around that as well. So certainly the way that I look at it, you'll probably find that most outsourcings will also come within your DORA and operational resilience regimes, because generally speaking, it is a provision of services, but it's not necessarily the case that all services that are looked at particularly from a DORA perspective are going to be outsourcings. So quite a lot to think about there. As I say, even the outsourcing regime, it's not a direct cut across into DORA. So you have to be doing your gap analysis to work out exactly what the differences are, and then how you're going to comply with them from a requirements perspective.
And I think it is, as you said, it is, DORA is quite large. It's incredibly prescriptive. It builds on other building blocks. And I think the interesting bit there that you pointed out, obviously we've got the UK and we've got the Europe, and we don't play nicely together all of the time. But I think it's that balance between looking at it from a UK perspective in terms of what do I have to do for all the stuff that Tess went through, and then how do we look at it from a DORA and a European perspective. And I think where do those two cross over? And if we want to bring that a little bit to life, I think Tess, you did very briefly touch upon it, which is the CrowdStrike challenge now, which a lot of us will be familiar with, but only familiar with through absolutely not realizing that that's exactly what they did. So as part of, and I think this is the way we look at understanding it from where we sit in a vendor perspective. So we have obligations on the left and right hand side of a chain. So we have obligations to customers and what they need to do, and we have obligations to our suppliers. So if we think, Harry, you touched on things like those hypervisors, we've got the likes of Amazon, Microsoft, and so on, in terms of what services do they provide. And a really interesting talk I was in with Microsoft was, they said for us what it means is, as an example, they become regulated as a critical service provider in Europe, for example, where they're providing hosting services for other services like ourselves to sit on and provide those services. So that was a different way, I think, of thinking about it for myself. But I think what we have seen and what brings it home for a lot of us is what this is going somewhere to try and help to protect. Tess, I think you spoke about this quite nicely in terms of it's really trying to look at from that end customer and perspective is protection of that end client and end customer, is understanding that full end-to-end value chain. And although you may give your processing to Microsoft in this case, and they relied on CrowdStrike, and obviously when that had a challenge and an issue, which initially wasn't spotted, they did test for it, they didn't see it, was that caused worldwide outage, and that just think really starts to bring to light, and you touched on it again in terms of both the digital part as a community, as a nation, as everything else, we are all moving and relying very heavily upon that digital essence of everything. You know, we use our phones, cash is disappearing, and that disappearance of cash. So not only did CrowdStrike make it really obvious to things like booking for flights, you know, financial industries and financial services, is we've seen this for the likes of high street brands in the UK, such as Sainsbury's, Tesco, Greggs, McDonald's, where they've all had challenges being able to accept payments and have fallen back saying, actually, we can still do it, but you need cash. Very few of us actually carry any cash now, because as you said, we've moved over to that, you know, kind of very digital side of everything. And it really starts to bring it home to a lot more people of, if those services were to fail, and as we have seen them fail, not being able to book a holiday or a flight slightly different, but if we can't go to a supermarket and purchase simple things like bread, milk, those smaller sustainables, that's where it really starts to become super prevalent that we need to do something, and something does need to be done. So I think in that case, we can see those both of those regulations trying to go somewhere to kind of do that. So I think if we look and kind of branch out and move on from that in terms of how it refers to, you know, that operational resilience, you know, as you both touched upon what it means from your perspective, is so when we look at things like managing the internal factors as well as critical third parties, there's two sides of the fence there. How do we think, is there complementary play? You know, from Harry, I'll come to you first. On that DORA side, do we think there's complementary play between looking at internal and external, which I think from a DORA perspective, when we look at those ICT and those third-party providers and critical service providers, to what happens on an internal perspective? So, Harry, I mean, what are your thoughts in terms of how we look at that part?
I think it's an interesting question, like, Kevin, and I mean, I think what both of the regimes, whether it's DORA or the UK, is really assessing how external service providers are really impacting your ability to provide services to your particular clients, and how therefore that firms ingest those services, as it were, tie them into their own systems and procedures, and then tie that back out to what the client is receiving. A key point, which I think that Tess did pick up on or did mention, was these sort of risk tolerance limits and effectively sort of setting the expectations of what clients need to receive as well. So that's another sort of external factor, is that you've not only got to work out how people are bringing in those services into you, but also working out what the expectations are from your external client base, and therefore being able to marry the two together. That then requires, as Tess has already articulated, a very, very large internal implementation plan in order to be able to marry those two together.
Yeah, I think Tess, I mean, just before I bring you in, Tess, I think, Harry, as you say that bit, so we do obviously have regulated entities from where we sit, but we have to, and we understand from where we do have those regulated entities, how that works within a DORA perspective, and obviously the obligations test we have to the operational resilience stuff from a more UK perspective. But I think I really like the way you touch on that, Harry, is we have to play a little bit of that balance in terms of understanding our obligations to our providers, our obligations to our customers, and any pass-through obligations that they may have upon the end part that we rely on. So I think it really starts to bring home how we're looking at that complete value chain in terms of from customers all the way through to provider, and the bits in between is understanding and doing that large implementation. So I think, Tess, I know you touched upon it slightly, so I mean, I'll bring you in on that one as well. So I quickly wanted to interject on that myself.
Yeah, I mean, it's interesting, the internal, external, and depending how you sort of frame that. But, you know, you've got the kind of, a very significant regulatory angle to this and the regulatory compliance angle to this. But then you've also got, you know, what do you do, as you sort of intimated, Kevin, about your supply chain, and how do you commercially contract around, you know, service levels in terms of impact tolerances and, you know, timeframes, and how do you get your sort of internal plan from a regulatory compliance perspective in terms of operational resilience to then be reflected in your commercial contracting with your supply chain. And you know, look, this stuff isn't easy. They're two quite different things, and they're two quite different worlds in a way, and getting that to marry up is an exercise that requires, you know, a lot of thoughtfulness, I think.
Yeah, and I think something not to take away from that, I really like the part you hinged on it right at the end, is although we're talking about it quite openly and quite nicely and quite fluent, this isn't an easy thing to do. It is very complicated, and there are, you know, how you said, Dora's super prescriptive. There's a lot of stuff to pay attention to. So I think, so on that, Tess, I mean, in terms of when we look at it, the differences to how that might apply across the sector when we're looking at that internal, external, and what obligations we have, and then trying to decipher that. What are your thoughts in terms of how does it differ across the sector?
That's you're putting me on the spot there for quite a prescriptive answer. I mean, I think so. Well, the devil's in the detail with this stuff in terms of going through, you know, depending on you know, which of the respective legislative regimes you're in, which of the purviews that you are in as a regulated entity, and then which of the regulator purviews your client base is in as well. So, you know, you may be a payment firm, but you may be facing off to banks, and they are also having to comply with this too. So there is I won't give you a ready answer, because I think it's quite, the devil is in the detail, depending on how all of that kind of fits together. But it is an important point, I think, Kevin, that working through when you've got those interactions of different types of regulated entities which are caught by different aspects of the UK and the EU operational resilience framework, making sure that your ultimate product fits the letter of the prescriptive rules for each one is, from a compliance perspective, really important. I can't give you a ready sort of answer in terms of like, where have I seen that sort of jigsaw puzzle not fit together? And hopefully, I don't think I haven't spotted across the UK and EU frameworks, or indeed within the UK framework, any sort of red flags in that not being something that can be navigated, but it is something to be navigated.
Yeah, and I think that's kind of right.
Yeah. I was just going to pick up, Kevin, as well, just on so this point about sort of negotiating with your, you know, suppliers and third parties. I do think the critical third parties regime, which, you know, depending on who you talk to, will apply for somewhere between 5 and 15 critical third parties, and will be designated by Treasury. I do think that's going to be an it's an extension of the financial services regulatory perimeter in quite a significant way, but how, you know, that will only, you know, apply to a certain number, small number, I expect, of service providers, but how that changes the dynamics of kind of commercial contracting on this. So how you commercial contract with you know, your biggest suppliers versus how you commercially contract with your smaller but important business service line suppliers, and how I think it's going to, and then sort of interaction with your regulators on all of that, and the interaction of the critical third party service providers with the same regulators, I think is going to be quite an interesting and novel set of dynamics.
And I think, and I appreciate I put you a little bit on the spot. It was a little bit deliberate, but I think what was nice to understand is, from your observation, it is a jigsaw piece, and our jigsaw puzzles and how they fit in is kind of where you really have to pay attention, as you said, devil's in the detail, and really understanding how they fit. I mean, Harry, similar question based to yourself. You know, it's not fair to put Tess kind of on the spot a little bit without throwing it to yourself with a little bit of a similar question.
Yeah, that's absolutely fine. So I was going to take a slightly different take on this, because I think the other piece of this, which, I mean, we've been slightly focusing on what firms have to do in respect of the operational resilience and the provision of services to them, but they also have to think about it the other way around. You may well find you've got certain firms who are going to be subject to it in both cases. So to give you an example of that, we're all aware of the new safeguarding proposals which have come out for the FCA. And if I think about that in the context of the provision of safeguarded accounts, so if I'm a payment services firm, then I'm going to be thinking about compliance with the safeguarded rules, not just from the safeguarding perspective, but also then from an operational resilience perspective, because clearly my ability to continue to provide services to my clients is going to be dependent upon my safeguarded banks. Query whether that's an outsourcing as well. It's definitely within operational resilience. But then from the bank's perspective, they've got to comply with all of the safeguarding rules from the other way around. But also they'll be thinking about, well, I'm a service provider. How do I comply with the rules in that perspective as well? So they've got not only their own rules in the provision of bank accounts, but then also thinking through the operational resilience as a service provider, and also in the context of themselves as a deposit taker.
I think so. I think you mentioned that both of you a few times in terms of that is that operational resilience, and I think Tess, you mentioned it right at the start in terms of things like often people might look at this and go, well, is business continuity and operational resilience, are they largely not intertwined? Are they largely not the same? And that is something we see quite time and time again. So, well, I've got business continuity plans in place. My BCM exists. If my application falls down, I know what I'm supposed to be doing afterwards and how I can continue offering that service. So, from our perspective, we see the one hand is that business continuity is how do you continue to provide the service, whereas you've got the operational resilience, which sits slightly adjacent to it and aims at doing a different thing. I mean, I think, are you seeing from your perspective how can they be complementary of one another? And I think is how do they almost sit on the top? And Harry, as you said, DORA is built on top of multiple things. Tess, you said the same thing. Is all of the FCA guidelines and all of the pieces we're looking at the moment, again, built on multiple layers of things, is how can they be complementary to one another in that respect? I'll go Tess first, sorry.
Yeah. So look, I guess I see sort of business continuity planning as almost like backwards looking in the sense of it's happened, what are we going to do? Whereas the operational resilience framework is all about identifying what your resilience vulnerabilities are, and then getting sort of board and governing sign off to kind of work towards remediating those. And that is as I sort of emphasised at the beginning, an expectation by the regulators that is an ongoing and evolving and adapting process. But I do think I absolutely agree that they're complementary. There is a little bit of a Venn diagram about this stuff, and in terms of I think there's a question that's come in around how do you devise kind of practical scenario testing, and there's definitely an overlap there in terms of when you'll think the things that you think about in terms of business continuity and how you might respond to a business continuity incident might also feed into how you design your scenario testing. I can say a bit more about scenario testing, but I'll perhaps give the floor to Harry.
Yeah, so just and Harry, just as you come into the test, you've nicely picked up. We have had a couple of questions come in, and I think this one works quite nicely into the discussion we're having. So we'll expand out a little bit on that. But just a reminder to everybody who's listening, there is the option and availability to ask us any questions, stick them in the chat. We'll try and get around to them, and those that we can't, we'll try and formulate some answers. And I'm sure Natasha and the guys at the PA will try and help get those published and sent out. So I think, Harry, on that, and then we will, so handing over off the back of what Tess said, but we will kind of look a little bit more about the mapping that you touched upon, Tess, and then how do those kind of creating those scenarios and then executing against them, how does that work? So I think, Harry, we just come to you first off the back of where Tess left over, and then we'll expand out on that piece.
Yeah, so I think on business continuity, I think the other thing just to note there, I mean, if you look at your Venn diagram as to when business continuity planning and operational resilience sort of end and start, as it were, you probably find that most of BCP is within your circle of operational resilience, for those of you who can remember how Venn diagrams work. But I think the key difference, I mean, if the FCA thought that BCP planning was sufficient, then query whether they would have brought in operational resilience at all. And I think the key thing that they really wanted to do, which Tess alluded to before, was to get people to think about it in the terms of business services. So rather than I'm getting a particular service, how do I replace that if I need to? Thinking through more around what am I offering to the client or my customer? What are all the various inputs, and how do I ensure the operational resilience and or the resiliency of all of those inputs taken as one, rather than just looking at it on a very siloed basis of, well, if my IT goes down, then I've got to do this. But actually thinking about it, well, my IT provides into my ability to do my payments runs or my ability to do my reconciliations, which then enable me to hand out money at the hole in the wall or something along those lines. So I think that was the key step change that I think is sort of the key differentiating factor between the BCP and the operational resilience rules.
And I think
I think that's really well articulated, Harry. And I suppose if I add to that, I suppose as well from a kind of a regulator perspective, you might say business continuity planning is around business continuity for the firm. There's definitely a big angle which I alluded to at the start of operational resilience being about operational resilience on a firm level, but also on a financial sector, financial stability level. So to Harry's point, that focus on what is an important kind of critical business service. And then there's an extension of that, which is important services may be interconnected within the financial system. There may be, contagion risk, et cetera, from an operational risk occurring in one firm. And indeed, as we've seen with a number of the examples that were referenced. So although both business continuity planning and operational resilience are firm focused, there is, I think, a bit more of a if I call it a macro prudential or financial stability overlay of the operational resilience framework.
And I think we mentioned Venn diagrams, quite partial to a Venn diagram, but we always used to look at it, both from when I was a bank and then as we come out, is when we look at that as concentric circles. So Tess, exactly as you said, backwards in and then from front back outwards, in terms of if my end output or my end outcome that I want to achieve, how as you said, is to provide cash at an ATM. If that doesn't work, how do I keep then going backwards to go at what point in time, where do I need to focus, and what breaks to stop that, and what do I need to fix to kind of either prevent or get it back up and running? And then if we look from a bank outwards or a financial services organization outwards, where do we stop drawing our concentric circles to impact outwards? So if something fails, Harry, as you said, if we've got a technology challenge, what happens? How do we then sort the technology piece out? What do we have to put in place, or who, or what's the process we need to do that? And then how do we look at the frameworks that we have to say, if almost like if we talk about Venn diagrams, we might as well talk about if then else. If this happens, then we do, else we do. So how do we then look at protection and kind of bringing stuff up that way? And I think that leads quite nicely, Tess, as you said, in terms of the question that we've had in, which it works to kind of bring that on now, is mapping those processes out, and then in terms of practically scenario testing those important business services. Tess, I think I'll throw it to yourself first in terms of thoughts from you.
Yeah, so I think the question was in particular was kind of getting at how do you work out what is enough in terms of scenario testing, and of course what is enough for a fintech might be different to what is enough for a non-fintech, for example. And proportionality is always key here. But what is the regulator, for PSR firm, what is the FCA going to be content with? I think for me, the thing here is demonstrating commitment to operational resilience, demonstrating a thoughtfulness about it, acknowledging that it's a journey, and being clear about where you are on that journey, and showing a willingness to kind of evolve and develop that journey. So, there are obviously set out in the FCA handbook like various kind of minimum scenarios. Now, demonstrating that you have, whether or not those scenarios are hugely relevant to your business, but demonstrating that you have actively thought about it. If you have discounted that scenario, then you give a good and and credible rationale for why you've done that. And then in terms of how you practically go about doing scenario testing, so the FCA have kind of indicated that they recognize there are different ways, but they also see a kind of journey on that. So they talk about scenario testing evolving from judgment through to desk-based through to kind of empirical testing that might include penetration tests or disaster recovery. They talk about simulations and lessons learned, and then they also talk about including third parties in testing. Now, I don't think personally that for a newly authorised or registered firm that what is or should be expected of your scenario testing is that full suite of different types of ways of coming at scenario testing. But I think the FCA would expect you to have demonstrated thought around what is the right type of scenario testing for your business at that point in time. Recognize that as your business develops, changes, grows, evolves, that different types of scenario testing might be relevant. Demonstrate a commitment to evolution. So if you've got a desk-based scenario, demonstrate a commitment that you would expect to move to, over time, a more practical simulation or penetration testing, and show that you understand that this is an evolution and a journey. I mean, I think, again, in the sort of rhetoric of the FCA in terms of what the standard is, they do seem to want you to create a set of scenario testings which take you, outside of your impact tolerance, and it needs to be severe enough to do that, and to do it. And the reason that is sort of conceived is so that you can understand what your vulnerabilities are and therefore identify what your remediation plan is. I don't know if that's helpful to the person who asked the question. Those are my thoughts. I'm sure Harry's got some too.
Harry will now, and just before I pass to you, Harry, so if I put back to the first hat I ever wore when I started working, it was performance engineering and testing. So my job when I very first started was looking at building tests and designing tests to test large-scale applications, systems, and business processes. And I really liked what you said is, when is enough enough? Because you can't ever do 100% of everything, because there'll always be something you can't have thought of. But the fact that it's an evolution, it's organic. What we test today won't necessarily be what we test tomorrow. And when we've learned those lessons and we come back around to this time next year, we'll have evolved what we need to do depending on how our business has grown, how the economy is shaped out, what external influences there are. And I really like that as a ship. So Harry, I mean, I think if we continue that question kind of through over to yourself, is that your experience, or have you got a slightly different take on where we might go with that?
No, I was actually just going to add to what Tess said, and also just sort of hark back to what she said earlier, which is, so if you look at sort of how the FCA deals with things, I mean, a lot of its rules are written in quite a sort of strict liability way, but they don't enforce every breach, not least because they wouldn't have the resources, but they tend to enforce against people who have shown no regard whatsoever to compliance with the rules. And provided you have come up with something which is at least sensible, then they will, typically speaking, cut you some slack. And so going back to what Tess was saying, referring to sort of in her introductory remarks around the fact that this is an annual thing, and it's the same in DORA as well. It's not just let's do it once and that's going to be it for the next 10 years. It's also a matter of ensuring that at least once a year, and if you're a bigger firm, possibly more, reassessing what you've done, particularly in the context of how your business has developed, particularly if you're a fintech startup. What was right when you started doing this is possibly not going to be right when you have grown your business by 2 or 3 times, or have got different services being provided. You're going to need to keep this under review with the governance process going all the way up through to the board, so that you can show that it has had the proper oversight throughout your own company's value chain.
And I think just to tease out a little bit more what you've mentioned there, Harry, is so if we look at it from that perspective in terms of we've written our plans, we've done it, we've handed it off to the FCA, they've given us the thumbs up, we've done a good enough job and we've done it in that space. The bit that you mentioned, if you start off as a small fintech, for example, but then you grow over time, and within that calendar year, you increase your services and offerings. Is there a point in time we should reflect back and go, I've changed significantly enough from when I did my first test and submitted it within that calendar year timeframe to think I should probably change what I've done now and almost keep going? So I mean, is that something you'd expect? Is it just, does that show good forethought, or is that something we think we may see with a tolerance perspective to go, if you've grown 30% or changed the scope of what you do by more than 30%, you should rethink about doing this again?
So I think there are two different aspects to that, actually, Kevin. So I would distinguish between a new service or just providing more of the same service, because I think when a firm introduces a new service, certainly I think what the FCA would expect to see, not just from an operational resilience perspective, but that there is a paper, there's been work done internally to assess what the general risks of that particular service are, whether it's from a legal or a regulatory or an operational perspective. And as part of that, there will need to be some determination as to the operational resiliency of that particular service. And I would distinguish that because from just growing a particular service, so you just rapidly taking on customers and therefore processing more payments or doing more e-money or whatever it happens to be. And as part of the sort of initial plan of when you set up that particular service, there should probably be baked into that some thought put around at what point do I need to start thinking about refreshing the stress testing or re-stressing the resiliency, because you might, for example, have decided that something's not an important business service because actually you don't provide that to too many customers. But you'll then need to think about, well, at what point does it become an important business service because of the level of customers or volume or whatever it happens to be. So I think that should get baked in within the original assessment, and so it therefore can be sort of monitored by the relevant people.
I think, Tess, that's something you nicely started on when we first started about that discussion, is that self-identification and what is an important business service and what isn't an important business service. Is that kind of where you see that?
Yeah.
Exactly as Harry said, is that where that's playing?
I think that's right. I think, what Harry said is absolutely right. There is a little bit of a steer on kind of what material means. So in the sort of FCA handbook and CISC, so it sort of says a firm carrying out a new activity or ceasing to provide an existing activity, outsourcing a new or existing service to a third-party service provider, or, to Harry's point, changes to an existing service in terms of scale or potential impact. Now, I don't think that means necessarily, as Harry says, just growing your business. As something like scale is kind of a bit of a loaded term, isn't it? There needs to be sort of a sort of a change in gear to sort of be deemed to be material, I think.
Yeah, so if I've 10x'd my service, I should really think about doing this again. So I've gone from providing it to, as you said, Harry, a smaller number of customers. If I 10x that out, then the likelihood,
in a short period of time. Yeah.
Excellent. I think we have had a question. I think, looking at the amount of time we've got left, I think conversation's gone really well. I think, Tess, you would like to take this one, which is in terms of the FCA operational resilience requirements. Will the operational resilience framework be shared with the firms, and will audits conducted in terms of the ISO 22301 will be accepted as evidence of complying with the requirements? And that is an incredible mouthful of a question. Hopefully I got that across, and hopefully you can answer that for us now, or go somewhere to doing that.
Yeah. So I and apologies if I've misunderstood the question. Just in terms of the operational resilience sort of framework requirements, that's kind of baked into the FCA handbook and various guidance on the FCA's website. I think the way that the FCA kind of communicates on that is through kind of conversations with firms on an individual basis in terms of supervisory priorities, or where it's sort of group supervising and that kind of communication. But I wouldn't expect beyond sort of, you know, regular updates to its website or through that sort of supervisory communication or sort of letters to firms on thematic findings, that you would sort of, you know, get a person, you know, a firm specific communication on the operational resilience framework. In terms of ISO 22301, I'm not an expert on this, but I think as it relates to business continuity, see our kind of conversation earlier, where there will be aspects of the audit in relation to complying with ISO 22301, which will be relevant and that you can draw upon for operational resilience. But I think I can comfortably and categorically say that I don't think any regulator would see that to be enough, because as Harry and I sort of articulated earlier, the regulator sees operational resilience to be additive to and different to business continuity.
Harry, anything you want to kind of elaborate or add to that one for me?
Not really is a short answer, Kevin. I think Tess has covered that very well.
I think so. I think we're coming up just on time. I think we've got one quick question, the first one that came in. I wonder if you could just give us a couple of minutes on this one. If we look at it, is as a fintech startup, how do we conduct stress testing of important business services? I think you touched on it a little bit, Alison, which is Tess, sorry, which is in terms of looking at what do we do desk-based versus how do we move that into more practical stuff. So, you know, from my perspective, technology side, I will always look to how do we automate it, use AI, use the technology that we've got at the hands to kind of move that through. But I think, is there any just a quick couple of lines from you, and then Harry from you, Sam? Tess, you first.
Yeah, so I think my sort of perspective on this was kind of how I articulated it earlier, which is, you know, engagement with the various commentary from the FCA, the rules and the guidance. I think you can expect to be, if you give that engagement, then you can expect to have a proportionality overlay in terms of what you ought to do. But I don't know whether Harry's got a sort of more practical advice than that.
I mean, I think the only other thing I would say is it starts from the framework. I mean, typically speaking, those of you who run businesses should be the most familiar with exactly where the risks are to that particular business. And so the first step is identifying what those particular risks are, to then identify what your stress testing should be looking at, applying the sorts of proportionality that Tess said. So what the FCA's expectations of a fintech startup with relatively few sort of customers or what have you is going to be less than it is to, say, a Barclays or a NatWest or a Santander, for example, would be where I'd be coming from.
No, and I think that makes perfect sense. If we look at it, is really, and I think that's the key piece I've heard from both of you, is it's that engagement, the willingness to engage, the proactivity, talking to your left-hand side of the chain and the right-hand side of the chain, and really trying to understand what your obligations are and what the obligations of others are. How, and I really like that piece, Tess, about it being a jigsaw puzzle and how that fits together. So I think that is kind of really the key takeaway. This stuff isn't going to go away. It is going to be around. If anything, it's going to, it will evolve. It will become bigger. There will become more. I think the reach will become bigger as we look at more and more services and the more digital opportunities that will be given as end consumers means more responsibility into those financial services, those financial organizations, us as technology providers who build out those services, and then the ones that we rely on to supply the underlying hyperscalers to be able to offer those services out. I think it really is, how do we all work together? I think it's how do we work together, understand our commitments, and show that proactivity and willingness to get involved and kind of really understand what it is we need to do. So I think what I want to say is Harry and Tess, thank you very much for giving up an hour of your time, and thank you to the Payments Association for allowing us to do that. As you can see, we will make this available within the next 48 hours. And if you have any queries or questions, I'm sure people have a lot, please send them through to the guys at the Payments Association, and we'll try and do the best we can. So thank you very much, and I hope you guys enjoy the rest of your day. So Harry, Tess, thank you very much for participating.
Thank you.
Thank you.
Thanks, guys.